Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a pretty interesting session where we'll be going through the current developments in Brent oil prices. And at the same time, we look at the new all-time high in gold and why that has been happening. And once we cover that, we'll go through the economic calendar before we cover the top news, the technical analysis. And through the technical analysis, we'll be looking at the major developments in majors, the dollar index, the major stock market indices. And on top of that, we'll also be looking at what's happening with commodities. So I would like to begin with a disclaimer that this session is purely educational. It's not investment advice, and it's not a recommendation to trade. So that aside, if you have any questions, feel free to type them in the live comment section, and I'll be responding as we go or as we approach the end of the session. So hello, Newton, and thank you for joining the session. So let's get started with a simple view of the economic calendar, trying to understand the key events for the day. So if you're looking at the economic calendar, you'll notice that Monday was largely a quiet day. And also today, we have had quite a number of news, including the NZIER Business Confidence Survey, the BRC Retail Sales Monitor, Westpac Consumer Sentiment, NAB Business Confidence Survey for Australia, Japanese Consumer Confidence, and preliminary machine tool orders before we saw the French trade balance. So going on for the rest of the day, it's NFIB Small Business Index for the US, the RTM TIP Economic Optimism Index later in the day, then a speech from governing board member Schlegel at 7:30 p.m. for Switzerland. So all these news are low impact news. So you can see from the graph below, they are all labeled in yellow, meaning that they are low impact news. So they are not expected to move the market much. So in such a case, when you have low impact news in the market, as always, I've always told you guys that you focus on the major moving assets, and that's what we will be focusing on today. So remember, the markets have been quiet for Monday and Tuesday, with anticipation of major news happening on Wednesday and Thursday. And of course, we have three central banks that are bound to announce their interest rate decision over the week. So first one will be tomorrow morning, which will be the Reserve Bank of New Zealand, which is expected to hold interest rates steady at 5.50%. Then we'll have US CPI data, which is expected to have increased to 3.4% year over year in the last month. Then the Bank of Canada, which is expected to hold interest rates at 5%. And lastly, we'll be looking at the European Central Bank interest rate decision, where it's also expected to hold interest rates steady at 4.5%. So those are the major key highlights for the week. And of course, on Friday, we'll be focused on the UK gross domestic product or the GDP report. And this will be at 9 a.m. on Friday. So that being said, now we can focus on what really matters for the day. And these are the major movers in the market. So let's begin by looking at the charts and try to understand what major movers we are looking at. And once we go through this, then we will be able to identify where the opportunities may lie going forward. So remember, we do this session ahead of the New York Open, so that when the most liquid session in the market opens, we are able to identify trading opportunities or basically trade from an informed perspective. So what we are looking at here is the chart of Brent oil. This is the major global benchmark oil index that helps traders and investors identify trends in oil markets. So clearly, you can see that a better part of last year, and this is from September through to December, oil was on a bear market. Moving from this high here, this was around $95 per barrel, all the way down to this bottom here. And the bottom was on December last year at $72 per barrel. So since then, you can see the second part of December was largely bullish. And then getting into the new year, January, February, and March have all been bullish, with the most momentum coming in the current month of April. So this is quite good sign, especially for oil traders. So I'll try and clean the chart a little bit so that it's easy for you guys to understand, view, and appreciate. So this is the swing low, swing high of September, and this is the current momentum since New Year. So the lowest price we have seen this year is right here. This was on the lowest price of January, $74.8 per barrel. Then on February, the lowest was $76.5 per barrel. Then on March, this was the price that we saw as the lowest, $80 per barrel. And this year, price has not moved downwards. So it just started moving upwards. This month. And all we have been seeing is a strong bullish momentum with a bottom or low of $86 per barrel. So if you look at the prevailing market trends from the 4-hour chart, it's pretty clear that we have had this area working as the support, with the January support being the major trend line. Then on the resistance side, we've had this swing here as the high, followed by this other one. And if you extend it over, you'll notice that we are trading closer to the upper trend line. So also, if I zoom higher, you'll notice that the trend lines kind of change direction over time. So from that low to this low, we have another trend line moving from this point to this point here. And from there, you can also see that there was a movement of consolidation. The price was just moving sideways. So during this period, notice the swings and how the market maintained sideways momentum before breaking out, pulling back for a while, and making this impressive rally. So today we'll be trying to understand why this rally happened over the past couple of weeks and try to establish whether there is a possibility that this rally will be extending further. So after the big momentum in the last 2 weeks, you notice that there was a pullback, and then Monday, Tuesday seems to be more of a sideways momentum. So what I'm trying to say is that this was a big and major move of about $7 in oil price. Then within a short period, and I'm talking about 2-3 days, we have seen the oil prices form this trajectory here. Whereas on the lower side, I would say this has been the trajectory. So on Monday, Friday, Monday, and then Tuesday. So it seems like oil prices are just moving sideways. So for over the last 2 days, we can say the overall momentum is just sideways. So we don't have much of a momentum in oil prices, but then eventually we'll be expecting to see a breakout, and potentially this could be happening on the upper side, but also the downside is also possible. But then we'll try to understand what are the key factors that are driving oil markets. So as usual, we all know that I've been quoting this for a while, that whenever you see oil prices moving, it's always as a result of the demand and supply. And this demand and supply comes from the big players as well as the speculation in the market. So what we have been seeing over the time is that economies are now beginning to rebound or to strengthen. And in this case, when I talk about economies, I'm talking about the major global economies. This includes the US, China, Eurozone, and so on. So with these economies rebounding, they create a higher demand for oil, and this tends to push prices towards the upper side. On the other hand, there's the function of supply, and from what we saw with the OPEC meeting last week, they decided to extend the current oil output cuts of 2 million barrels per day, and this led to a strong bullish momentum. So that's one key factor to consider. The other key factor to consider when you're trading oil is the real numbers that are happening in terms of imports, exports. So you want to track the US crude oil storage from IEA. You also want to track the crude oil supplies in the Eurozone as well as in China to track how there is a shift in demand and supply of the crude oil prices. So besides this, there's also the current issue of the Israel-Hamas war. And what happened is that countries that are supporting Hamas, some of them, including the Hezbollah, they decided to destabilize the Red Sea region, which is a major shipping route for crude oil. And by destabilizing this region, it led to ships being diverted to all around Africa through South Africa, which takes extra time to deliver the oil. So besides taking extra time, it's taking an extra cost. And of course, the insurance companies that are covering those ships have had to increase prices due to the instability, prices for their insurance. And as a result, there's a premium on oil prices that is estimated to be $2 to $3. So besides that, there is also the major suppliers in the world. We know that the world's top producer of oil is currently the US. And of course, we have other countries such as Russia and China and so on. So, in the current war happening between Russia and Ukraine, we have seen several developments. And one of these developments is that the Ukrainian soldiers have been targeting Russian oil infrastructure. And so far, they have destroyed over 13 oil rigs, and that's basically impacting supply. So whenever there is less supply, you expect prices to be rising. Whenever there is high demand, you expect prices to be rising. But if the two factors are combined together, then the overall picture is to expect even much higher prices. So in this case, there seems to be a likelihood that oil prices may continue moving strongly upwards. And now that we have some form of consolidation over the last 2 days, I'm talking about end of Friday, the whole day on Monday, and today being Tuesday, then some form of breakout is expected at some point, and there's a likelihood that this breakout will be happening today during the New York session. So if so happens, then we should be expecting to see a strong bullish momentum in the market projecting into a new high. So if the market breaks the yellow zone that I've highlighted, then the next target will be the previous high that we saw on Friday last week, and potentially an extension of this rally to even higher prices. So that's my projection for oil today, and I think we could be seeing values above $91.5 per barrel. But then this has not happened yet, which means it's a wait and see scenario. So you remain patient until you see a clear break before engaging into a position. So that would mean just observing the price levels until something happens. So besides this, we have seen a new all-time high happening in gold. Gold has been one of the most bullish assets over the last couple of weeks. So you can see the projections here from the 1 hour chart. So the last 4 weeks have been majorly bullish for gold. And since the beginning of the new year, we can summarize and say that gold is basically just skyrocketing. So this being April, March, February, and January, you can see January and February are not very bullish for gold. But then March and April have been pretty strong for gold, all leading to a new all-time high. So the previous all-time high was around this area here. And of course, if you go to weekly charts and try to look for even further prices in the back, you'd notice that we are trading way over and above the previous all-time highs. So there was this time that at the price level of around 2069 was considered to be the highest price we will ever see in gold. But then once we broke that, we formed a new high of 2184. And then from there, we have been seeing a very strong momentum upwards. So why have a lot of investors been buying gold? Why has gold prices been going up? So there's quite a number of reasons. Of course, there's more buyers than sellers, but where are the buyers and sellers coming from? So first things first, there's two current wars that are currently ongoing, and they seem not to be stopping. And the worse they get, the more investors will be seeking safe haven. So the current war between Russia and Ukraine has led to investors looking for safety and buying some gold. Of course, the Israel-Hamas war plus the Middle East extended conflict is leading to investors going for more safe haven assets. So that's one of the reasons we have been seeing prices going up. So the second and major reason why gold prices have been going up is because major central banks have been accumulating out of gold, especially in the BRICS countries. So we have been seeing record numbers coming in from China, buying more and more gold. In the last week alone, the gold ETFs in Asia or in China attracted over 600 net inflows from investors. and this is becoming a trend now. So with this trend of more investors buying more and more of this gold as well as gold ETFs, it's leading to a very strong rally, and it doesn't seem to be stopping. So anytime we have had a pullback in the last couple of weeks, this is the 1 hour chart, a pullback such as this one, it has been met with a strong demand. So any form of pullback has consistently been met with a very strong demand in the market. And now we are looking at yet another pullback that happened earlier in the day after gold hit yet another all-time high. So gold has never traded above $2,365 per ounce. So once it got here, maybe some profit taking, gold pulled back for a while. And now from the 15 minutes chart, we can see that there is a trend extending from last week on Friday. And if you zoom out, you notice that this has been consistent. So last week on Friday, then on Monday, and then today being Tuesday, seems like the market is following this path. So after getting to this area here, you can see the strong bounce that have happened. So the strong bounce is right here. After the market was going down, got to this area, buyers are coming in and attempting to push gold prices higher. So in this case, as we enter the New York session, there is an expectation that gold continues pushing higher and potentially forms a new all-time high above the 2365 price level. And in this case, potentially moving higher to the areas around 2380. So main reason looking at this as a potential bouncing point and a breakout higher is because there doesn't seem to be a stop into gold demand. So the other reason I want us to talk about is that if you look at the major stock markets around the world, and this is starting from the US, the S&P 500, the Dow Jones, the Nasdaq, they are all very close to near all-time highs. If you look at the Nikkei 225 index, close to near all-time highs. The London FTSE 100 index also close to all-time highs. The Eurostoxx 50 index close to all-time highs. The Spanish IBEX close to all-time highs, and so on. So with all these markets being at all-time highs, it basically screams of risk, meaning that there's a lot of speculation in the market, and prices could start taking a step backwards soon. So if this begins happening now, then investors are already trying to protect their positions. And the way they are doing it is by holding onto safe havens. And some of the most popular safe havens in the market include gold. So that explains why we are seeing more and more allocation to gold, leading to even higher prices. So you can see there's more people joining in. You can say hi in the comment section. If you have a question, simply type it and I'll be responding right away towards the end. So hello Malombe, Manthi, and Alexander. Thank you for joining the session. So there's a strong likelihood that gold will continue with this bullish momentum, especially if things were to start changing direction. So by saying things was to start changing direction, I'm referring to inflation numbers. So if inflation remains significantly high across the world, and central banks are forced to continue holding rates higher for longer, or even consider more rate hikes, then as a result, we could be seeing more rally in gold while stocks begin to weaken. So hello, Tony Coril, and thank you for joining the session. So let's look at other assets. Gold and oil are not the only assets that we trade in the markets. So we'll be starting with the dollar index. At the beginning of the week, I had mentioned that there's a strong bounce in the dollar index, and I expect a continuation higher. So this happened on Thursday and Friday last week before we raised some gains. And now Monday and Tuesday have significantly showed that the dollar index is weakening. So what does the dollar index, a weak dollar index, mean for the markets? So a weak dollar index means that the dollar is weak and other currencies can at least gain some ground over the dollar. And this has been happening across several markets except for the Japanese yen. And this presents some good opportunity for a pullback. But then remember, tomorrow we'll be looking at the US Consumer Price Index, which is expected to be a major mover of the dollar. And of course, if the CPI comes in at 3.4% or higher, that would mean that the inflation battle is getting worse. And as a result, investors will be betting on higher for longer, or interest rates remaining at a higher level for a longer period of time. And as a result, we could be seeing a much stronger dollar. So slower inflation, let's say inflation drops from 3.2% to 3.0, even 2.9, then that would mean that inflation is moving in the right direction. And as a result, the Fed may consider cutting rates. And as a result, we could be seeing a much weaker dollar. So, well, these two moves are not significantly big compared to last week. They're indicating some form of preparation for the CPI news tomorrow, and it could be the pullback before the pump happens. So you have to be completely aware of that and be patient for tomorrow during the CPI news. So as for today and for intraday trading, we know that the dollar has been attempting to break into a new high against the Japanese yen, but then there has been a pretty strong level around 151.9, which has been holding pretty well for the last couple of weeks. So since all the way back in the 20th of March, the USD JPY pair has just been moving sideways. So there was an attempt to break downwards last week, which was met with strong demand. And then yesterday we faced yet another resistance at 151.9, and today the market is behaving the same way. So in this case, for USD traders, I wouldn't dare be short on this one unless there was a major drop in US inflation. So it seems more likely that the market is testing this level more and more, which increases the likelihood of the market breaking this area. So for the beginners in the house, I know that when you're covering your basic training, most of the time you learn to respect support and resistance levels. But then it can be an internal message that works against you, such that whenever the market is facing a strong resistance, you think that it will always come back. But then the more a resistance area has been tested, the higher the likelihood that that resistance area will be broken. So in this case, there's a strong likelihood that eventually, at some point, the USD JPY pair breaks this area. So remember, even from the daily chart, there is several times we have seen this pair here. So the first time here I saw it was on 2022 in October. Then we saw it here. This was 2023 in October. Then here again on November 2023. And now we are facing it for 2 consecutive months. And there's a strong likelihood that the market will break and form a new high, a high that was last seen in the 1990. So there's a strong likelihood we'll be seeing a break. So in this case, if the market was to break above 151.9, it will represent a very nice buying opportunity for USD traders. So there's also the alternative where the Bank of Japan decides to intervene in the currency market and lead to a big selling pressure around this price level. So the last time the price was here in 2022, what happened is that the Bank of Japan intervened in the currency market, leading to a big sell-off. But then if you look at the overall pattern on the daily chart, it's looking more of a cup and a handle, which is often taken as a continuation pattern. And the handle itself looks like a cup and handle again. And this might imply that there's a good likelihood there will be a breakout higher, which might represent some nice buying opportunities. But for now, it hasn't happened. So it's a wait and see. And once that happens, then you consider going for those positions. So as for the majors, looking at Euro USD, it has been enjoying some pretty good run from yesterday, beating this previous high. And now with this breakout happening, it seems more likely that the euro might continue strengthening against the dollar for the better part of the session. So it might be something to consider going long on the euro. And this is for a pretty short time opportunity. The overall expectation on my side is that eventually the euro will be losing to the dollar because it seems more likely that the ECB will be cutting rates before the Federal Reserve Bank of the US. So for now, let's enjoy the bullish momentum without fighting it. And once the opportunity presents itself to go short, then that will be the better opportunity. So for pound USD, we mentioned that we are not trading in between here. I remember sharing this during the market snapshot on Monday. But then from what we are seeing today is that we have a clean break which means that there is a likelihood that the pound continues gaining against the dollar, and we could be seeing this projection extending to previous resistance areas. And some of the key or crucial points include this area here, and this is a price level of around 1.27711. So there is a good chance that this momentum break extends all the way up. So we could be seeing these pairs continuing to enjoy strength against the dollar today. So for USD CAD, we are seeing the pullback happening here, mainly because the Canadian dollar has been strengthening as well as oil prices. There's a strong correlation between the CAD and oil. And having bounced from this resistance, pulled back, retested this area and moved lower. Now it seems more likely that the price may extend all the way to a previous support area of around 1.35146. So US equities have been tricky this week. All I've been seeing is noise. So for the last 2 days, Monday and Tuesday, we cannot say definitively that these markets have been trending. So starting with the Dow Jones, this is the price action so far. So it seems more likely that the market is moving just sideways, awaiting for the CPI report, which will be coming up tomorrow. So for now, I don't think it makes sense to trade these indices unless there is a major move. So there was a glimpse of hope on the Nasdaq earlier in the day. So the glimpse of hope can be identified here. So 2 days of sideways momentum, Monday and Tuesday, but now we are seeing a potential break, but then the break of the previous high hasn't happened yet. So don't really be interested in this if it was to break 18,209. Now I would consider a bullish momentum trade. But for now, it doesn't seem likely that the market will break here. So we just remain patient and see what happens in the New York session. So for the S&P 500, this is the 1 hour chart. So I can try and clean the chart and make it as simple. So let's go to 15 minutes, zoom out, shift the chart, and then try to understand what's happening here. So this is a sideways momentum kind of price action. So unless there's a clean break above this area here, it doesn't make sense to go for a bullish position. But then if there's a clean break, then you might consider going for a bullish position here. But that is if we have a candlestick opening above this area and closing above this area. In that case, we might consider looking for positions, perhaps even targeting the previous high here of 5,256. So that hasn't happened yet. So we remain patient and observe what happens. So Bitcoin has been a pretty big mover with a key momentum. I remember when we discussed this major consolidation here, expecting that the price would bounce and rally all the way up to $71,000 per Bitcoin. So eventually price managed to break above this area here. So we got into a new high here of 72,800. It's not the all-time high, but it was pretty close. It was just 2% shy of a new all-time high. And once we got to that high yesterday, you can see that price basically pulled back downwards before bouncing at 69,559 this afternoon. So from the 5 minutes chart, I will try to understand what's happening here. So I'm sure everyone can see this. So that has been, a major resistance for Bitcoin. So if this has been the price action, and we excuse just this one momentum here earlier in the day, so we can see a majority of the candlesticks have been playing along this path. So in this case, if I was looking for a bullish position, I would be very patient, waiting for the market to eventually break towards the upper side. And if there's a break above this area, then in that case, consider going for a bullish position. But as per now, the path remains within these two trend lines. So for the Euro 50 cash index, we have seen some pullbacks, speculated on the bounce and the rally towards the previous high. But then from what we have seen, after the market has pulled back, it has varied but not gotten to the previous high. Then a sharp drop followed by another bounce. And in both cases, the market failed to get to our targets. So in this case, if we go to the 15 minutes chart and zoom it out, now we can see that a pattern is developing here that has been working as the resistance. And now that the market is playing very close to this particular trend line, then I would be looking for a potential short selling opportunity here. and that is if the market gets to this area and is unable to break. So from the 1 hour chart, this is how it looks like. So we have had a sequence of high followed by a low, then a lower high, a lower low, a lower high, a higher low, and this basically indicates that the trend is weakening. So we have been seeing this strong bullish momentum, but since getting to that area, the market has not been very promising. In fact, if I was to clean the chart and zoom it out, then bring it back, we'll notice that something has been playing out here. So let's say this has been our support. Sorry for that. So if this has been our support, you'd notice that in the last couple of weeks, we have had a new high followed by an even higher high, and then a lower high and an even much lower high, which is indicating some form of weakness in this trend, and we could be seeing the price reversing back downwards. So from the most recent highs on the 1 hour chart, it represents some form of resistance and a change maybe in the trend. So once the market gets here, we will be observing to see if there's a clean break or if the market is unable to form a new high, and in that case, consider short selling positions. So the French 40 index was on this formation, which looked like a frag. There was a break here and then another break where the market was unable to break for 3 times. Then it made a sharp drop, pulled back to this trend line here, another sharp drop, and then higher, and now another sharp drop. So this is indicating some form of weakness in the bullish trend that we've been enjoying for the better part of the year. So this was the price in January, the lowest price, and this is the highest price as per this month. And now we are seeing the price pulling back downwards, which may indicate a potential reversal coming. So in this case, I would also be interested in looking for potential short selling positions. And this is on the Euro 50 cash index. And if I was to draw a trend line here, then this is the area I would be observing to look for short selling opportunities. And this is along this trend line here. So we don't have much happening before the major news of the ECB on Thursday. Remember, we say that the European Central Bank will be making an interest rate decision on Thursday. So we could be seeing some slow market activity up until when we get the news on Friday. So for US dollar trading against the Swiss franc, we've had quite a strong momentum after the surprise rate cut happened earlier in last month. But now that the price is pulling back downwards, I remember on Monday we speculated a strong bounce. Market rallied to Friday's high, but then pulled back downwards today. And now we have a key major support being retested here. So in this case, I expect that the Swiss franc will continue strengthening against the dollar up until we get to this area here. And then we observe whether there will be a bounce or whether the price will be changing direction here. So that being said, pound yen is making quite an impression today. We know that it's quite a wild pair and it can really go wild. That is, meaning it can make a big move within a short span of within a short time period. And now that we're having this rally, it doesn't seem like there is a stop until we get to 193.5 price level. So in this case, I expect a continuation of this momentum towards the 193.506. So for the dollar trading against the Chinese yuan, we have seen that the dollar has been pretty weak for the day, and now we are seeing some pullback happening here. So from the 15 minutes chart, this is how it looks like. So I'll try and zoom it out, and you can see clearly it's a strong bearish momentum, and we are about to get to a major test area of 7.23266. So the test area is right here, and now the price is approaching the same level. So once we get to that price level, then we'll be observing to see what price does at this area, with the expectation that the price may bounce from here and now start heading higher. So Chinese equity indices have been pretty bullish. They are not at all-time highs. They are currently bouncing from 3 or 4 year lows. And now you can see for the Hang Seng index is approaching the upper trend line. A trend line that has been held from December 2022. So over a year, we have been praying within this bearish momentum. But now there's a very strong bounce from this bottom we saw in January, and Chinese stocks are beginning to recover. So in this case, I expect to see some further upside momentum from the Hang Seng Index, with the previous high being around 17,197. So in this case, an expectation that the price eventually gets to the previous high, and that's expectation for me is all the way up. So for the China A50 index, we had a clean break here of a major trend line. So if you go to the 4-hour chart and then you zoom out, you notice that this was the major trend line from the daily chart. This was what was happening over the last couple of years. So the major resistance, there was a very steep decline in the bear momentum, but then that decline ended and the market started having some signs of strength. So after bottoming at 10,648, we have seen some momentum coming in. So from the bottom we saw in January, all we have been seeing is upwards trajectory in price. And now this month, we have seen a pullback, the market retesting these lows. And now if we decide to clean the chart, remove everything in the noise, then we can all see that the market is currently attempting to make yet another bounce. And if this bounce is successful, it represents a nice buying opportunity. So it's a book pattern. You can see the price going downwards here, finding support on the 4-hour chart, and then 2 candlesticks going up, which indicates some sign that buyers are entering this market. And if this plays out as expected, then the price could now rally to a new high over here. So in this case, there's a good chance we'll be seeing some far more upside coming from the China A50 cash index. So for Japan, we have been seeing this pullback happening, but then the pullback seems to have come to an end. And now what we are seeing is the market attempting to break the upper trend line. So in this case, I would say if we were to use the most recent highs here, then I would adjust my trend line here. Just a moment. And now this looks like an attempt to move higher. So in this case, an expected breakout towards the upper side would simply be expected to lead to a strong rally towards the top of the pattern. And the top of the pattern is the previous high, somewhere around 41,145. So for AUD USD currency pair, we've seen the Australian dollar being pretty strong. So on the 4-hour chart, this is how it looks like. And after the price found support on this trend line, now it's headed higher and looking to attempt to meet the previous resistance. So there's still more room for upside. So in this case, with the correlation between gold and Australian dollar, I expect at least the market to retest the last week's high of 0.66666. And once we retest this area, then we observe the price action to see whether there will be a continuation or a bounce. So that's it for the day. Thank you very much, guys. Now I'll be looking into the questions, try to respond to some before we approach the end of the session. So a good question from Malombe. Why is Euro USD suddenly strengthening yet we had a strong non-farm payrolls? So the strong non-farm payrolls were indicating a very tight labor market, and that led to the speculation that strengthened the dollar. But now that is old news, and now everyone is focused on the decision by the ECB on Thursday and the CPI inflation report tomorrow in the afternoon. So it seems more likely that we are having the calm before the storm, where in some cases you might see the dollar index weakening before making a major move upwards. So that may explain why we are seeing the euro being very strong against the dollar. So another one from Alexander, seems the Euro USD is ranking grabbing liquidity above 1.096. Now you're speaking my language. It seems more likely that this current rally is only short-sighted. And now once we get to some of these levels, we should be expecting to see the price pulling back. However, for Euro USD, I believe the last time we had a high here was 1.08862. So 1.08862 is the next target. And above that, we could be seeing a push to around this area here, which is around 1.09035. So I'll be observing these two levels dutifully. to see if the Euro USD reverses from this point or even from this other point. So for now, we continue enjoying the rally because the expected news is tomorrow. So we could be seeing an overextension of this momentum against the dollar going forward, especially in the New York session. Hello, Frederick. Happy to join from Kitengela. Thank you, and you're welcome. If you're in the Kitengela office, say hi to the team. Hello, Lamik Buire. So, a good question here is FXPesa AI automated economic calendar functional? Yes, it is. So, from the equity tools, you'll find that the calendar is fully functional now. So, good comment from Roy. Gold is going wild. That is true, really true. So after I mentioned here that we are seeing a bounce from this trend line, I expect some good momentum during the New York session, perhaps touching onto a new all-time high. So in this case, I expect to see further momentum upwards. And if I was to select a chart for the day, then the chart for the day would be gold, which is currently showing some good momentum. And of course, the chart to observe for the day would be oil, which will potentially break either of these two trend lines. How do you set a news moving average using MT5 on a desktop? This is not tough. It's something you can do easily. So let's say you're trading gold and you want to add a moving average. You basically go to insert, indicators, and then you go to trend indicators. So a moving average is a trend indicator. Go here, you find the moving average. Then you set the period, whether you want to see a moving average of 200 candlesticks, 150, or depending on your intended number. Then there's different types. There's simple, exponential, smooth, and linear weighted. So the most common ones are simple and the exponential. So in this case, I'll just choose a simple moving average of 200, click OK, and then I'll see this line indicating the average directional movements of every 200 candlesticks. So I hope that answers your question. How do you identify support and resistance using indicators? I don't know why you guys like indicators, but you can easily identify support and resistance just by focusing on the previous highs and lows in the chart. But then, if you want to be pin accurate, you can try an indicator called the zigzag oscillator. So you can go to insert, then indicators, then custom. Then from here, you can find a zigzag oscillator. Yours may not be as mine. I believe I have more than one zigzag. Somehow I can't find mine. Okay. Try and find it. Yeah, I have the zigzag here. So I found it. So just click OK. And then you'll have this line showing you the major swings in the market. So the points where the market is turning will basically represent the zigzags. And using the zigzag, you can easily draw your trend lines. So I believe that was the last question. Thank you very much, guys. Thank you for your time. Thank you, Mercy, for your question. And I hope to see you guys on the next session. So remember to like the video. And if you have not watched the latest episode of the Bullish Banter podcast, make sure to check it out on your favorite podcast platforms. You can also find it on YouTube. And of course, we also have the Financially Incorrect podcast, which has a new episode available on YouTube as well as other podcast platforms. So make sure to check it out and enjoy the rest of your day. Thank you guys for coming. Thank you for joining and interacting with the session. And if you have a community, if you have other traders, whether it's on WhatsApp or it's on Telegram, you can always feel free to share these sessions. They are recorded live on YouTube and share with them. And hopefully we get to grow the community together. So thank you guys. See you then.